Please note that this conference is being recorded. Would request all participants to keep all devices on silent. Thank you. I now hand the conference over to Mr. P.S. Reddy, MD and CEO, MCX. Thank you, and over to you, sir.
Yeah. Good evening, everybody. Thank you for once again assembling for this investor call. This evening, on Saturday, we had presented our results. As you have seen, the top line is the operating income has increased substantially high. In fact, the kind of growth we have seen is one of the highest since the CTT was imposed, in 2013, around that time. So the top line has been doing very well as a company. Our turnovers are increasing, options volumes have been increasing, and the business is doing well. But unfortunately, it could not be trickled down to the bottom line due to hefty costs on technology. I must say that I am disappointed that we couldn't make the CDP project go live as we have been, eagerly waiting for. Of course, there are a variety of reasons. One is that the necessary compliances could not be completed, including audits, in a manner that is expected as per the whatever extent guidelines, and some stakeholders have desired some more time. And unfortunately, while we are doing mock, toward the end, some mock sessions were cancelled due to a long time taken by the EOD, BOD processors. So the trading could not be started next day, the mock sessions by 9 o'clock, as it happens when we go live. So some of these things have dampened the process of going live, and nevertheless, we are working on it. So we should be able to make it live this time. Again, I am optimistic about going live. That is the reason I am making this statement. As I said, I myself is disappointed for not being able to go live. The last quarter. Having said this, the results, if you have seen, the ADT has increased in options by 26% to 83,341 crores compared to the turnover in Q4. The traded clients in F&O saw a growth of 12%, almost all 3.9 lakhs during Q1 versus 3.52 lakh clients. So these are all unique clients. When I say that clients, then they are all unique. So that is something. The EBITDA margins on consolidated also 19% for Q1, as against 14% for the Q4 of the last year. But as I said, our technology costs have brought down are nullified, I would say, the efforts that we have made to company to grow. And I think with these words, I will keep it open for question answers to the members, to the investors. Thank you. Thank you so much.
Should we begin the question and answer session? Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead with your question, sir.
Good evening, sir. Thank you for the opportunity. The first question is around CDP. If you could share more details. You did touch upon broader things, but what exactly happened, because we were doing a lot of mocks and we were pretty confident about the migration. So is it something that came up in the mocks that has derailed the transition last time? And over the last 1 month, we haven't done any more mocks. So what was the status of the mocks, and when are we going to restart the mocks, and the likely timelines to migrate to the new platform? Would it wait till December, or endeavor is to do it earlier?
See, our endeavor is to do it early, so definitely early. There's no doubt about it. What has happened in the last, why it has been what you call a derailed, or whatever the reason that we couldn't go live, and what we are doing it is, yes, we did find in the mocks some observations, and that's why the EOD BODs were taking more time, and we need to start the trading obviously the next day by 9 o'clock in a live production, and we have to continue till 11:30 or 12 in the night. So the window available is we have to get ready system by 6 o'clock in the morning. So that we have not noticed consistently happening. So that is very important for us, that we see good amount of stability out on that. If there is any problem in the EOD BOD, obviously we can we have the systems to verify what is going wrong and then fix it. But that fixing is taking some time. That's why this kind of things are taking some time. But now what we have been doing for the last 1 month is, while those are fixed, we are doing our internal mock. Not that it is not being done. We are not exposed to the member brokers. And I think in the month of August, we will plan out the mocks for member brokers. This is one part of it. The second part of it is, certain audits have to be commenced only after certain tests are done. It's not a parallel activity. Earlier we planned it as a parallel activity, but now we are doing it sequentially. So that sequential thing is also being done. So that is another reason why we have not exposed the systems to the member brokers. Then we, as I said, we are not waiting for the December to come. I think we should target to go early live. Thank you.
But just to understand, sir, any timelines that you can share, given that SEBI has been very explicit that no contracts now would be allowed or approved post December. So they, I think, did not allow the Jan series, and incrementally nothing would be allowed. That is what my understanding is. So would that put basically, are we targeting like October or somewhere to migrate to the new platform?
The way that I put it is, anyway we are getting approvals, and when we are getting approvals, we are issuing a new contract. That's one part of it. The second part of it is that we are not looking at December, as I said. We would like to go early. It could be even September. It could be even October. But I mean, that's not our target at all. We want to do it as early as possible. As I said, we were almost all there at the end of last month, so we shouldn't take much time for us to get a control of the situation. Thank you.
Right, sir. And sir, we saw that MCX Clearing Corporation had come up with an RFP for some real-time spend margin calculation software. So could you share some details around that, and why is this not part of a TCS platform, and why are we raising a separate RFP for this?
See, TCS has been working much the same way. Current system is based on the span of a CME software, and that is a part of the integral part of the system anyway. But some of the exchanges are doing a faster risk management by reducing the what you call turnaround time for the risk computation from whatever the milliseconds that they are having or microseconds or whatever that they are having it. So the some of the what you call custom made systems were there in India. I think they are going to maybe develop such kind of system where we can further reduce the latencies. And if you see, the span was used maybe in good old days online, but even CME itself doesn't use it, is what I was told. It is maybe batch processing what it does, but not the online real time. So it should be it's tailor-made for that kind of designed for that kind of batch processing. But what we wanted to do is to more online. As our volumes increase, obviously risk has to be mitigated much faster than what it is today. So there's no immediate requirement. It's a kind of a what you call developmental issue. That's what it is. Thank you.
Right, sir. And last one from my side, what was the option segment revenues for the quarter?
Yeah, 1 minute.
For the quarter, around 53% of our transaction charges was issued from options, as compared to 49% in March quarter.
And sir, what are the total transaction charges in the quarter?
Total transaction charges was 121 crores.
121 crores. Thank you so much, sir. I'll come back in the line.
Thank you. Our next question is from the line of Mr. Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Just continuing on the question on the software transition. So you mentioned that earlier you were thinking of doing the audit parallelly. Now it's going to be sequential. So is this a change in the sense that now that we have more time, so we want to do it? Or is it a statutory requirement that we have changed this? So what is the exact reason for changing the methodology of doing this?
Well, it is not a changing the methodology. Earlier, we wanted to, given the time available, we wanted to do many activities simultaneously. And I think even now, we are almost all there. That's why we have wanted to do it, sequentially, so that we are able to expose the stable system to the auditors. That is the way it is.
Okay. Could you outline some, timelines in the sense that, what should we be watching from MCX with regards to this transition, in the sense, what would be the stage? The first stage is mocks getting successful, 100% successful. What stage the audits would start? So could you give some timelines for us so that we can be, aware of these things, and that gives us more confidence that the transition is on schedule?
See, I don't think we will be able to, give out the plan that we have, of course, submitted to, presented to the board as well as to the others and the regulators also we have given. But then I don't think this is proper for me to disclose it when we have not disclosed to anybody. Thank you.
Okay. So coming to the volumes now. So do you think that the FPIs which were allowed now to trade would, earlier we were saying that the software transition would be a key to onboarding FPIs. Does that kind of derail this further and FPIs will wait another 6 months to onboard, or there is an increased traction of FPIs onboarding right now?
FPIs are already started trading on the exchange platform, and the volumes are after month are increasing. That is what our observation is.
Could you share some statistics as to what are the number of FPIs and what are the volumes coming in from them?
Well, in comparison to whatever the top line, the number of options traded or futures, it may be not so much significant, but I think we will hit that kind of number, whatever one is looking forward to. But I will not be able to disclose. We have not disclosed it to publicly. That's what it is. Yeah.
No problem. And last question from my side. In spite of the launch of many contracts, we've not seen any major jump in many major volumes coming in on the futures side. How should we kind of see the futures volumes panning out from here?
Well, see, almost all maybe in all these mini contracts on the whole, maybe there were 2 lakh investors are there. In various contracts, of course, that number varies from one mini contract to another mini contract. They all have to again get onboarded. That's one important thing. So it is happening. There is a growth in the numbers, but all of them have not come back as yet. That's for sure. And that is where our efforts are going in at this point in time. And to make this mini contracts vibrant, maybe it should again come back to contributing about 20-25% of the total volume of that particular product.
Okay. Let's just keep in one more last one. What are the number of UCCs that we had in the quarter and at the end of the quarter in terms of retail investors?
We had 3.93 lakhs during Q1. This quarter ended now, as against 3.52 of the last quarter. Traded.
Got that. Thank you so much and all the best.
Thank you. Our next question is from the line of Samit Shah from Dinero Capsurf. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. My first question is regarding options turnover. So what are your expectations for options turnover in FY24? And what number do you think we'll end the year at?
I think it is forward-looking statement kind of thing. I don't think it is appropriate for me to, make any such this one. All that I can say is the trend is it is increasing. That is the way anybody can make an analysis of. And once our migration is completed, probably we look forward to introducing other option contracts as well. So we would like that portfolio to grow, and we expect doing a reasonable growth in that. Thank you.
Okay. So second question. So for how long can we continue to see the cannibalization of futures turnover, which as we've seen that options turnover have grown significantly, but some of the futures turnover has gotten cannibalized. So how long can we see this trend continue?
Well, you call it as cannibalization, but I have not been accepting this for the simple reason that the futures hedges also require, or the option guys, whoever are option writers, need also futures contract to protect their exposure. But having said that, I must also say that if we introduce more and more futures contracts also in other products, the turnovers will increase. Secondly, that a lot of retail investors are interested in the options because the margins are less. In futures, for example, crude oil futures, it will be almost all 30-40%. Now, it's not a small number. and that's why they are deserting maybe these counters. That doesn't mean that the genuine one is not there.
Okay. So then what would be the reason for turnover degrowth in the last 3 years in the future side?
No, well, you see, I think we are, I would say, heterogeneous time periods we are comparing. While you said that the continuous 3 years, different regulatory changes have, caused different ways of this one. Peak margin is one reason why the last, maybe year 19 or 2021 had impacted, badly. Subsequently, our options contract picked up, of course. That is maybe offshoot of, peak margin regulatory regime. And so options are compensating us. From the revenue point of view, I think we are not worse off. As long as the option contracts grow much faster than the loss in futures in terms of contribution to the revenue, I think that should be welcome. Of course, I am not saying for a moment we should lose our futures. Okay, but yes, that's the way trend is happening at this point in time.
Okay. And one last question, if I can put in. So I just want to understand how revenues come in from options premium. So if you can just explain in a little bit detail how revenues flow in from option premiums. So does it change for at the money, out of the money strikes, or how exactly does it work here?
We have what you call only 2 slabs options. Okay, up to 5 crores premium, it is 50 rupees, and more than 5 crores premium, it is 40 rupees. Only 2 slabs. Now, the premium itself is a market determined variable, and whether it is at the money or in the money, maybe if it is in the money, premium will be more. If it is at the money, maybe it's relatively less, and if it is out of the money, it will be still less. So it all depends on where it is getting traded. But my sense is that many of the contracts are either getting traded at the money or maybe in the money. That's the way it is. And the options turnover is, as I said, please explain what.
Options turnover for the quarter was 61,433, which is a 35% increase over the previous quarter. The premium was 1,213 as against 989 crores in the March quarter.
Okay. So I just wanted to understand that revenue as a percent of premium, like how does that move with respect to if the number of contracts of out of the money increase? So how does that change? How does that percentage change?
Well, if more contracts are traded out of the money, the premium will be less. Accordingly, the revenue will be less.
The revenue would also be less, correct?
Of course, yes.
Okay. That's all from my side. Thank you.
Thank you. Our next question is from the line of Chintan Sheth from Girik Capital. Please go ahead with the question.
Hello. Am I audible? Hello.
Yes, sir. Please go ahead.
Yeah. So 2 questions. First on the tech transfer again. How much capex we have spent so far till January, and following up on that, given the delays, are there any cost overrun versus what we have planned earlier? You have not disclosed the total cost you are going to spend on this migration, but are there incrementally any cost overrun because of these delays? If you can say payout to TCS.
You see, the payout to TCS will be as per the contract. Okay. Whatever, there's no increase or anything, and because of the delays, the cost that will go up is the licensing cost of the third-party licenses. Maybe that is application. Some of them we use it, so that we have to renew it, isn't it? Because we are running mocks and other things. So that may be the additional cost that will be incurring.
Are we capitalizing those licensing costs currently, right?
Currently, till we go live, it will be capitalized, and once we go live, then it will be taken to the revenue.
And how much we have spent so far between March to June?
I think that's not a public number. I suppose that's not appropriate.
Sir, it's given that the shareholders have been waiting for this transition for quite some time now, and there have been recurring delays. It should be very prudent and transparent from the management front that it provides some clarity on the cost company would like to incur, because on the OPEX side we are already will start bleeding out from next quarter from 80 to 125 crores quarterly. Transparency should be there at least, given the patience we as shareholders are keeping.
No, I understand. I appreciate that point. What we can do is maybe next quarter we can add it in our disclosures. That is better first.
Sure. And second question I had was on the any optionality we still have on buying out 63 months software if this as a plan B, if this doesn't work out the way we are planning currently.
See, I do not want to dwell on things which are not in my control. Okay, and we have to make it happen. That's the way it is. That is what the determination is. Unfortunately, again, I myself is dissatisfied for why we couldn't go live. But I don't think we are looking at any other option other than going live. That's the way it is.
Okay. And the depreciation rate was lower. Just a couple of bookkeeping. Depreciation rate was sequentially lower. And if I do the math on the other operating income as a percentage of transaction revenue, that also sequentially declined from 25 to 20%. So anything to call out for?
See, on the depreciation, I'd like to clarify that in the last quarter, we had bought certain equipment which as per the accounting policies were less than 1 lakh, right? So what we did is we capitalized it and we fully depreciated it.
Okay, that's why.
So that if we don't depreciate it, then if we charge it directly to the P&L, then it gets disallowed in the tax audit. To get the benefit of that, so we capitalized it and then fully depreciated. That's why there's a variance from March to this June.
Okay. And on the other operating income, as a proportion of transaction revenue, seems to decline from 25% to 20%.
That is because your base has increased, no, sir?
Okay.
So operating income, transaction charges has increased, while the others are more or less constant.
But nothing, anything to call out for. It's just a normal base increase impacting. Okay. Sure. I'll join back in. Thank you.
Thank you. Our next question is from the line of Lavanya Thotla from UBS. Please go ahead with your question.
Hello. Am I audible, sir?
Yes, ma'am. Please go ahead.
Yeah. Thank you so much for the opportunity. So, just wanted to check on the RFP which was released by Clearing Corporation. So, wouldn't we have an option to add any additional requirements such as these to the Infosys, TCS project which is going on?
See, at this point in time, our focus is only to work with the existing functionality requirements that are required for go live. Now, we don't want to give them additional work and then try to manage that another component as well. So that is one part of it. The second, the CCL being a separate entity, and they would have to manage the affairs independently, and this comes under their risk management module, and they would like to have this separate module and then interface with the TCS system so that the risk is computed, the margins are computed much faster than what it is provided for, and then, secure the markets accordingly.
Okay. So going ahead, for any additional feature that we or clearing corporation would want, so would we be asking TCS to add, or will be floating an RFP for each of the new features or any addition that we want to do the existing feature? How would that go?
Yeah, if it is a core engine, a core system, then obviously we have to go to them. But if it is a module which can be separately developed, then that can be done separately. But the way that we have designed it, that using the APIs we can extract the data and then manage the requirements as we need it. So probably if unless it is touching their core engine means not just matching, but then core components of the TCS system, we would like to develop it ourselves.
You mean in-house or?
Yeah, in-house, or you may hire in the resources and then develop it. That's the way it was thought of at the time.
Okay, got it. Thank you. And on the option contracts, so I think we have launched few new options on bullion related to the mini contracts also, which was helping bullion volume for options. So this is the one which has reduced the premium for bullion products on options. So this is the same scenario that we wanted to address through bi-monthly contracts on bullion, right? So do we expect more traction in this options once those new products are launched, or how do you see that?
Well, options are not available on all bullion contracts, although there are features in a smaller denomination, but options are not available on every contract. But as you have seen in the equity markets, weekly options is popular, and maybe fortnightly we can look at it. That's the way we are looking at them. One is the value of the contract itself will go down. Second, the tenure of the contract is also reduced. So both ways it will be reducing the cost to the investors. That's the way it is.
Okay, got it. One last question from my side. So on the software thing, last month when we tried the audit process, you mentioned that audit will take somewhere around 2 to 3 weeks. So even now we are planning to do it sequentially, but the audit process most likely should take the same amount of time, right?
Yeah, it should take about 3 weeks. 3 weeks, that's right.
Okay. So why was we not sure about the audit procedure earlier, and how is it different now?
No, it was not sure about it. We didn't expect so many problems to crop up, especially EOD, BOD issues. And obviously, auditor would like to audit a system which is free of all those issues. So that is the issue.
So any specific EOD, BOD issues, like in creating making it ready, or can you help us understand what were the specific EOD, BOD issues?
No, EOD, BOD calculates several files. Calculate several obligations, margins, maybe some file processing, and then gives to the members what their obligations are. Next day morning, it will prepare the system. Okay, so there are so many batch processes, some are parallel, which are sequential. Now there are pre-EOD checks that we have kept. So unless those pre-EOD checks are all satisfied, system doesn't move. If there is a problem in the pre-EOD check, it didn't match, then they have to step in and then verify and then fix that and then move on. So these are the not just one activity. There's a huge scheduler which does all these kind of activities. So that is taking some time. Now that time is being processing time, file generation time, they are all getting reduced now. And we want the system to be available for the member brokers to next day morning by 6:30. Then we are sure of going live, starting the trading by 9. So that is where the time taken for processing was the worry.
Okay, in last 1 month, could we reduce the time with our internal testing and all, because mock testing was not happening, but
Yes.
with internal testing,
Yes.
this has
Yes.
come down?
Yes. Yeah, it is. It has. It did, brother.
Okay,
It did.
thank you. Thank you so much. Thanks a lot.
Thank you. Our next question is from the line of Sanket Goda from Avendus Spark. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Just a few data keeping questions. One is on what was the margin money income earned in the quarter? And second is how much is cash on the books, and if you can do the split of that into where it has been invested and likely yield, basically.
These margins that are collected by a clearing corporation are invested as per SEBI guidance, so they can only invest in overnight liquid schemes or...
No, sir, I was referring to, first of all, the interest income on the margin money for the quarter, and second, your own cash, treasury cash, which is sitting on the books, so how it is been split, and what is the yield we are earning there.
Okay. So the margin money as on 31st March was 1,000 crores, and the clearing corporation has earned 14.67 crores on it at a yield of 6.81. And our yield, our corpus for the quarter was around, just give me a minute, around 900 crores, and we have earned 7.72, and around 700 crores of it is parked in long-term instruments, which is amortized. Yeah, so even if the interest rate goes up or goes down, we will keep earning 7.72. And for the quarter, the yield was around 7. That's it.
Okay, got it, sir. And the next question is, sir, basically to understand on the future optionalities. One is the electricity derivative, and the second is that till we don't go live on TCS, means all the incremental approvals, that is our plan to launch the bi-monthly the gold contracts will get delayed, right, sir? So that's the right understanding. And just wanted to understand on what is how it is happening with respect to electricity derivative, when it can go live.
Well, there's no movement on that electricity derivatives contract as yet from the approvals point of view, and that is something which we have been asking for. That's one part of it. The second part of it is, we would like to launch new contracts only in the new system. That is what we are very clear on that. And so that migration will be easier for us. And that's the way it is. We would like to, yes, you are right. Because of this delay, some of these launch of new contracts has got delayed. And that is something which is not anticipated by us. Yes.
Got it, sir. And last one on base metals. One, I think you have alluded to that point, but just wanted to understand that at some point in time, the mini contracts were meaningfully around 7 to 8% of the total future volume, and even the nickel contract was at one point of time 7 to 8% of the total future volumes. Honestly, these two have not become, nickel is almost zero today, and the mini contracts have not contributed to the extent what many people have anticipated before the ban was introduced. Or so just wanted to understand how we can revive both the things, mini and nickel, and so the futures could see a traction.
See, the nickel contract, that it got lost in terms of liquidity because of the whatever has happened on LME. Okay,
right.
And some of the players may have deserted this counter, and so that's why we lost liquidity. Second, the way to revive, as we understand, is to introduce a mini contract rather than a bigger contract. And currently it is a 1500 kg contract it was. So we would like it to be, a smaller contract maybe smaller itself is good enough rather than going for a main contract. That's one part of it. But the only issue is that trading lot and delivery lot has to be identical, is the requirement of the regulation, and that is something which we are waiting for some decision on that. So is the case of copper. That was also doing well. The mini contract of copper was doing well. So we have not introduced mini contract in copper as of now, because the trading unit and delivery unit has to be identical is the requirement. So having said this, these two were also contributing at that time good amount of volumes. Now, coming back to the other, the zinc mini or the lead mini and or the aluminium. I think, if I'm not mistaken, aluminium is doing well, and the zinc was also doing definitely not as much as we wanted it to be, as it was contributing in the past almost all 20 to 25%. And that day we have not seen, as I have clarified also some time ago, that all the investors who had traded in this contract have not come back as yet. While our effort is to reach out to them, I mean through the member brokers, and tell them that here is a mini contract, and this will help in hedging in smaller players. And we are also reaching out to the MSMEs. That's a very important segment, and we are engaging with them to show that they can hedge their risk using these mini contracts. That's the way it is at this point in time. Thank you.
Got it, sir. Thank you very much.
Thank you. Our next question is from the line of Amit Chandra from HDFC Securities. Please go ahead, sir.
Yeah. So thanks for the opportunity. So my question is in terms of the tech transition. So in terms of the mock tradings that we have done, so for how many hours we have tested the software in the full ready states, maybe in the month of June, and is there any kind of a benchmark where you can guide us that how many hours of testing is required for the software to go live, like whenever you are planning to do it, and what actually gives the confidence that we will be live before the timelines, and if we go live before the timeline, so it will be a parallel run, or we will go completely live irrespective of the software of 60 to 3 months being there?
Well, see, in the past also we explained when we were, this question, when we wanted to go live, you go live, that's it. There is nothing called two systems running simultaneously, because that doesn't happen. Okay. So the question is, how do you do the parallel runs? Is that you take the dump from the existing system for a particular past trading date. Okay, it could be even yesterday, or it could be as well as maybe 1 month ago. Create the same circumstances. What was the collateral at the system at that time? What was what you call members, various clients, UCCs, all of them you configure, and then pump the data, and then see that you get the correct results. So that is the way that parallel runs are going on. Okay, that's the way we have done. And so coming back to the other question as to how many tests were done. Yeah. I think I do not know exactly in the month of June how many done, but we had done in the last time, sometime about 30, 35 we have done. I don't exactly remember 30, 35 in the last maybe June and April, May, June. That's the way I will put it. Parallels were done, and and we have also done. More important is we used to migrate the data of Friday. That is the latest data. When you want to go live, obviously you take the Friday send data and then migrate it and then give it to the members for the Monday trading. So like that we have done migration of real-time data, and then members have to test on a Sunday we had given, and then if in real life scenario we will erase that mock trading data of the Sunday and leave it open for the system for Monday onwards, real-time trading. So those tests also we have done, not that we didn't do that. And the point I'm making is and all those things were carried out. As I said, some of these observations that came and the EOD, BOD taking more time and system not being available ready with certainty by 6 o'clock is one major dampener is what I would like to say.
Okay. No, so is there any kind of an statutory requirement in terms of the number of hours that you need to test, or in terms of the check?
To my knowledge, there is nothing that is prescribed.
Okay. And in terms of the issues that we were seeing, was it widespread across members, or is it from smaller member brokers or from larger member brokers? So if you can highlight from where exactly the problem was coming.
No, it's not a question of smaller members or bigger members. Some may be localized, okay, and whosoever participated. I mean, some may have been localized, but the EOD BOD is nothing to do with any specific member or anything like that. It's a kind of time taken for processing various files, etc. That's the way it is.
Okay. In terms of the appointment of the CTO and the CRO, so how critical are these two positions in rolling out the new software?
Well, you see, when we had appointed in the past CTO, we had also taken in the one more gentleman as a CDO, Chief Digital Officer, other designation. But we are fully aware that technology is a very critical component, and we need backup also for that. That's how the board has decided that we should have 2 senior executives in this profile. So as regards to the CTO, to replace the one who left, I think process is almost all completed. I think once it is necessary approvals are obtained, and they will join. That's the way it is. Of course, they will take time to join, as you know, all that.
Yeah. So, from that angle, is it mandatory? So, in terms of the joining of the CTO or the CRO, so the CRO role is more critical, and obviously CTO is there, but CRO also from the regulatory angle, because there's a lot of regulatory angle also involved in terms of rolling out a new software. So, how that is being taken care of as of now?
Well, we have internally another senior officer is discharging that functionality, who was earlier inspection and surveillance looking after. So he has been designated as a CRO, while the CRO appointment is getting closed. When I say that it's getting closed, all processes are complete. It's just that appointments have to be done and acceptance has to be received. Then obviously they will join thereafter.
And for the CTO?
CTO is also same thing. We just have to get their acceptance. That's all. Offer.
Okay. Thank you.
Thank you. Our next question is from the line of Chirag Madik from Kinos Capital. Please go ahead with your question, sir.
Yeah, thank you for the opportunity. So I have 2 questions. Both are related to tech. I just wanted to understand. I understand the point that you are unwilling to let us know what is the investment amount you are spending on the tech. But could it be possible for you to share us that compared to investment that you are doing on tech, how much cost or quotation did 63 Moons give you for the current software that you are using?
No, are you saying that 63 Moons, what offer they gave for buyout? Is that what you're saying?
Yes. Compared to compared to investment we are doing.
I think it's not appropriate to disclose those commercial matters, but it is substantially high. So much I can say.
Can we say that it was 3 to 5 times?
I would not. I do not want to say that, please, because it's not proper for me to comment. Thank you.
Fair point. No worries, sir. So my second question is, as the delay of the software getting start for the run is impacting our P&L statement. By the way, we are paying a little higher than earlier times. Like now we are going to pay 125 crores amount. I just want to know, in a similar way, is there any sub-clause in the contract with TCS which states that if there is any delay in getting the software ready, they would be penalized too somewhere? And
well, as I clarified in the last call also, there are penalty clauses, and which were, usually whatever the vendors we have it, there is a penalty clause, of course.
Okay, that is it. That is it. Thank you.
Thank you. Our next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. So, 12 crores growth quarter on quarter in transaction income has translated to 9 crores increase in EBITDA. That's the kind of operating leverage you're sitting on. Rather, I would say you're wasting the leverage potential. My first question, so when we spoke to a broker, they said commodity options are growing because now a trader can use the equity F&O margin for commodity F&O as well. So how many member brokers have this cross margin functionality approved by the regulator? Any idea?
See, there's no interoperability of the clearing corporations unless otherwise that kind of cross margining will not happen. If a member has in NSE, let us say 5 crores, 10 crores or 100 crores is lying, unless they deposit physically that particular money in the clearing corporation of MCX, that kind of benefit cannot be given. That is the current position and the regulatory position. So there are members who do transfer if there is a cash balance, they do shift to CCL. Again, next day morning, they again take it back to the NSE. But this operational inconvenience at times lead to a lot of pressure on the member brokers as well as the clearing corporation, because it has to happen in a jiffy kind of thing. Yes, some do operate in that manner, but we had given certain suggestions to regulators, helping us to provide maybe a semi interoperability kind of situation, and they are examining, I suppose, and let us see.
Okay. And second, on futures in July, at least till today's data or yesterday's data, the futures ADTO has gone below 20,000 crores, I guess, for the first time in a long time. Can you confirm it? And are you doing anything to boost this futures turnover, or are you comfortable with this degrowth?
Well, there are two ways of looking at it. We are mostly concerned about ADT because we get revenue out of it. Okay. Now, it could be as flimsy as just a day trading, and then people just vanish overnight also. But there is another way of looking at it. What is the open interest that is maintained on the exchange? That gives us immense confidence that they are staying put in the exchange. We had almost all 20,000 crores open interest in these futures, and another in the what you call in options, another 10,000 crores. So what is important is how stable is the participation on the exchange is more important. Yes, the trading depends on the margins also. The margins are high in the case of major commodities in crude, NG and gold. And in gold we have an additional margin of 2%. So assets is 10%, additional margin is 2%. In the case of crude oil, I think additional margin of 10% is imposed, so is on natural gas. So this is somewhat causing more damage, I would say, to the futures turnover. So maybe diverting them to the options to some extent, of course. It's important that we reduce the cost of trading to the investors. And if we don't do that, there is a downside for the exchanges. We have to contribute more money to the SGF. Now, unless you contribute more to the SGF, you cannot have more open interest. So this is the what you call a dilemma, or this is the kind of situation we are stuck. Thank you.
Okay. And options, from the numbers you gave, it looks like options fee is 80 rupees per crore of turnover, which was 105 rupees in Q2 and Q3 of last year. When you launched, you said options is 33% of futures, 1/3. Then it went to 51% during those 2 quarters. Now it is down to 39%. How to look at it, on a normalized basis? What would be the ratio? I know you answered to another participant, but if you could explain from this angle, what decides the share of out of premium, out of money or up of money? Because last quarter it was 43%, now it's 39%. The variation is, even QOQ is very significant.
Well, since the option, we have only 2 slabs. One is 50 rupees, other one is 40 rupees. Now with this kind of growth in options, everybody is falling in the 40 rupees, what you call bracket. So it can go down below that 40 rupees. Okay. Now, if you compare with futures, when I said earlier it is 33%, it's a ballpark figure and it's a conservative figure. But our realization was better, at that point in time. That's why we made, it was, as you said, it's a 45 or 50%, and then it has come down. And as we go, maybe more and more, it will taper off at 40 rupees per 1 lakh. That's the way it is. It cannot go down.
Thank you, sir. Due to time constraint, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. P.S. Reddy, MD and CEO, MCX, for his closing comments.
Thanks to all of you for patiently listening to the conversation we had, and so many questions have come. As I said, I myself was disappointed for not being able to do the technology transition. This is something which we have taken it as a challenge, and we are committed to make it happen. Is what our statement is to be. This is something which we are driving passionately. Thanks to all of you.
Thank you. On behalf of Multi Commodity Exchange of India, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.